Welcome, Bitcoin fam, to the number one Bitcoin pod. Bitcoin's having a hell of a pump on the day, up over $5,000, which we love to see. In today's show, we'll discuss Arthur Hayes just dropped a massive Bitcoin price prediction. Bitcoin hitting 750,000 because the government cannot stop printing money. But for the real twist, according to Bitwise, the constant attacks from critics like Ray Dalio might actually be the reason Bitcoin hasn't already exploded to these extreme levels. In other words, the criticism is not killing Bitcoin, but fueling the next super cycle. I'll be breaking down the case for 750,000 BTC. Also breaking news, Donald Trump takes swipe at the banks over the stalled crypto bill. Also, Eric Trump just made a big announcement as well, including American Bitcoin boosting a hash rate. Also, big news out of Indiana. Their governor signs a bill allowing crypto and retirement plans. We'll also be taking a look at the overall crypto market. All this, plus so much more, right here in today's show. Today is pod episode 2270. I'm your host, JV. It's March 4th, 2026. Hell of a pump on the day, up almost 8%, over 5,000 in price action. We did recapture 74,000, not too shabby considering 2 days ago we're like 63 G's. That's practically a God candle, and we're ascending, looking to recapture 80 G's. Take that, evildoers. But let's kick it off with our feature story of the day. Shall we? Arthur Hayes just blazed, says the Bitcoin price is 750,000 by 2027 because the pretty little money printer will turn on and go brr. And also, we have, are the critics holding back the price from 750? Well, according to the Bitwise executive, that's exactly what's happening. So I got two 750,000 bitty price predictions, but let's start right here. Arthur Hayes not backing down on his Bitcoin price predictions. The BitMEX co-founder sticking to his bull call of 250 G's for this year, 2026, and then 750,000, which is practically another 500,000 increase over the next year, 2027, still 1 year prior to the next halving of 2028. In his view, this cycle is not about the charts. It's about the liquidity. Take that, lizard folk. Hayes argues the Trump admin will eventually flood the system with the money to stabilize the growth and keep the voters calm. That wave of liquidity, he says, is rocket fuel for the hard assets like Bitcoin. And while the retail panics through corrections, you know the weak hands, the Portnoys, the cabbage hands. Hayes is betting on the fiscal dominance. His thesis, simple. Government spend, currencies weaken, scarce assets go vertical. A simple stock to flow, supply demand. Key takeaways, Arthur Hayes just blazed, projects 250 G's this year, 2026, and 750 G's in 2027. Let me know your thoughts. The forecast relies on the liquidity cycle driven by the U.S. fiscal spending, and the institutional flows remain strong with 458 million entering the ETFs, which we'll dive into a little later. So yeah, Arthur Hayes on why Trump's money printing will send Bitcoin price to 750 G's. Governments facing voting pressure will spend aggressively, even if inflation lingers. More spending, more debt. More debt eventually means more money creation. And that is bullish, of course, for the most scarce and rarest assets and the hardest money to ever exist, the BTC. Hayes is framing this around one thing, the key word, liquidity. He also ties it into the geopolitics, a prolonged U.S.-Iran conflict. In his view, gives the Fed cover to ease the policy again. History shows during major wars, liquidity tends to expand, not contract. So if conflict is financed through this debt, the system absorbs it through the monetary expansion. So that's how we're likely to jump from where we're at today in the 70s to 250 before the end of the year, which will be a hell of a run up. And, you know, again, 550, even as high as 750,000 on a bull scenario. And that's before the halving of 2028. And you already know the year of the halving, we always go parabolic. So what are your thoughts on this bullishness? Let me know. And transitioning to the next $750,000 call, we're going to transition right here. Bitcoin's long run in debate with traditional macro investors resurfaced this week after billionaire hedge fund manager Ray Dalio reiterated his skepticism which is kind of ironic because he's been bullish on Bitcoin at times, and then you see him coming out as a total bear. The criticism has prompted swift responses from prominent crypto advocates who argue the criticism is precisely why Bitcoin has room to grow. For example, Matt Hougan, the Bitwise chief investment officer, claimed we would have already hit 750,000 per coin by now if the critics didn't exist. You know the fudsters. And speaking on the All In Pod, Dalio outlined several concerns about Bitcoin's suitability as money. Here's what he voiced. Bitcoin does not have privacy, noting transactions on the network can be monitored and potentially controlled. Well, they can absolutely be monitored. That's what the blockchain is. It's a public ledger, However, controlled to a certain extent. They can control the on-ramps and off-ramps and shit, but they can't reverse the transactions or control it like they can the US dollar. So let's get our facts straight, Mr. Dalio. He also raised questions about its technological and market risk, including the potential impact of quantum computing. So he's out there spreading the FUD. I mean, look, his face says it all, but what do you expect from a boomer? I'm not surprised. He says it's relatively a small market. That's a relatively controllable market. Now, that's why I believe there's so much opportunity. Embrace the fact we're only at a 1.3 trillion market cap, and we could potentially hit 200 plus trillion market cap over the next 10 years, which we've been discussing on the show. That's opportunity. If you're to ask me, we're going to overtake the gold market cap of 40 trillion, and that gives us a freaking 30 to 40x run up. Send it. But the billionaire investor added, the Bitcoin price behavior is raising concerns for diversified portfolios, he says. It tends to have a pretty high correlation with the tech stocks. Well, keep in mind, Bitcoin's on its own trajectory. Hougan pushed back on Dalio's critique, arguing concerns highlighted by skeptics are precisely what creates the Bitcoin long-term investment opportunity. And I'm glad he brought this up. He says here, some hear criticism, I hear opportunity. That's precisely what I hear when people blatantly express how much they don't understand Bitcoin, unless they're just purposely fudding it for their, lizard handlers. You just never know in today's day and age. Hougan added that the asset's upside demands on these concerns gradually are being addressed. He says, I invest in Bitcoin in part because I'm confident these things will change over time. Now, wider industry respondents, we have CEO Bill Barr, Height of Abracadabra, who posted a lengthy response defending the Bitcoin fundamentals. He pointed out, Bitcoin is comprised of exactly 2.1 upper arrow 15 sats, whatever that means. I'm not a genius with the mathematics, but I think it probably means something. There can only be 21 million Bitcoin. Let's keep it at that. And it will never, ever grow larger than that number. So they cannot manipulate the supply like they can do on every other asset class in history, including gold and silver, which they'll just dig more and find more from the ground. And in other words, Bitcoin is super scarce compared to gold. And the way I like to put it, Bitcoin has true scarcity. It's the only asset class with true scarcity because it's hard capped with their finite limited supply. Gold increases to the market 1% to 2% every single year without fail because they just invest more into finding the precious metal. And I do believe the precious metal markets are 100% manipulated, diamond markets, oil markets, you name it. But the one market they do not have complete and utter control of is Bitcoin and its scarcity. And that's why it's on a one-way trajectory through the firmament, up, and beyond. Okay, next story, and we'll keep this conversation moving. Big story here. Mr. Trump takes a swipe at the banks over the stalled crypto bill. Let's start directly with what he wrote. I'm assuming this was posted on Truth Social. His son, Eric Trump, posted what his father said, and I'll give you the response from Eric. But Donald J. Trump posted this. The Genius Act is being threatened and undermined by the banks, and that is unacceptable. We're not going to allow it. The U.S. needs to get the market structure done ASAP. Americans should earn more money on their money. The banks are hitting record profits, and we are not going to allow them to undermine our powerful crypto agenda. That will end up going to China and other countries if we don't get the Clarity Act taken care of. The Genius Act, he needs to start typing with spaces and paragraphs and shit. The Genius Act was the USA's first big step to make the U.S. the crypto capital of the world. Getting the Clarity Act done is the next step to finish the job and, most importantly, keep this big and powerful industry in our country. The banks should not be trying to undercut the Genius Act or hold the Clarity Act hostage. They need to make good deal with the crypto industry because that's what's in the best interest of the American people. This industry cannot be taken from the people of America when it is so close to becoming truly successful. Thank you for your attention to this matter. President Donald J. Trump. Eric Trump reiterated here, the big banks, the very institutions that have held the monopoly and screwed their customers for years, offering near zero yields on retail money market accounts, crushing low balance accounts with exorbitant fees, are now doing everything they can to block the crypto industry from offering real benefits, perks, and rewards on their platforms. They are the greatest hypocrites and are in a mass panic given they know they're losing the digital finance race. And then he tags World Liberty Financial, or DeFi platform. And I wrote something along the lines here. Big banks hate the competition. They've profited for decades off of the zero yield savings and endless fees. Now they're panicking like Karens, given people in crypto the alternative. The real question isn't whether the banks will fight it. It's whether the U.S. chooses to lead the digital finance era or watch it move elsewhere. You let me know how you think this will play out. And do you think this will get done and move forward? American Bitcoin boosts the hash rate with 11,298 new Bitcoin mining machines. This is bullish, especially consider the second largest Bitcoin corporate holder, Mara, announced offloading their stash of over 50,000 Bitcoin yesterday. Well, American Bitcoin and the Trump family is ramping up production. That's right. Trump family-backed American Bitcoin said on Taco Tuesday it expanded the fleet of the Bitcoin mining machines, increasing computing capacity as competition amongst the large-scale miners intensifies. Only the strong survives. The company acquired almost 11,300 new application-specific integrated circuit miners, ASICs, which are expected to add 3.05 exahashes per second to its operations once it's deployed at its Drumheller, Alberta site this month. Also heard Iran was controlling 5% of the Bitcoin hash rate, and obviously with the war, I guess that's going to be dispersed elsewhere, which is bullish for Bitcoin. Now, the purchase will boost the American Bitcoin's fleet size to 89,000 miners, representing 28 exahashes of own capacity. The additional machines are rated about 13.5 joules per terahash, a measure of energy efficiency that can influence operating margins in an industry where electricity costs are the primary expense. I'm understanding in Iran probably had amongst the cheapest of the cheapest electricity, you know. The expansion increases American Bitcoin's share of the global Bitcoin network total hash rate, modestly improving its probability of earning the block rewards. However, higher computing power does not automatically translate into the higher revenue. Mining profitability remains dependent on the Bitcoin market price, network difficulty levels, and energy costs. Currently, the network difficulty stands at 144 terahashes, meaning 144.4 trillion hashes are needed to find a valid block hash. It's mind-boggling if you really fathom how big of a number that is. 144 trillion hashes, you know, just to get a block reward. And it has been at that level since February 19. Shares of the American Bitcoin were little changed following the announcement before trading lower into the Tuesday session, broadly in line with the weakness across the equity markets. American Bitcoin, which went public last year through the reverse merger of the Gryphon Digital Mining, adopted the Bitcoin-centric corporate strategy, extending beyond the mining operations. In addition to expanding the hash, the company accumulated more than 6,000 of the Bitty on the balance sheet. According to the industry data, the strategy mirrors a growing trend amongst mining companies that retain a significant portion of the Bitcoin they mine rather than sell it immediately, effectively using production to build the long-term exposure to the asset. HODLing large Bitty reserves can amplify the gains during the price rallies, strengthening the company's balance sheet and potentially enhancing the shareholder value. However, the strategy also increases exposure to price volatility. So when we correct, they can be at a loss, unrealized at least. And you can see the big news here. Justin Eric Trump says the largest financial institutions of the U.S. are adopting Bitcoin, putting private wealth clients into crypto with allocations as high as 6%. Why so bearish, big money folks? It's the asset of our generation. I got to agree with that. American Bitcoin now holds over 6,000 The BT to the C. Next story, yo. The Indiana governor signs a bill allowing crypto in retirement plans. That's right. Indiana, please stand up. Shout out to the Indiana Pacers. I'm old school, Reggie Miller days. But anyways, they're going to start allowing certain retirement and saving plans to include crypto investments and have enacted stronger legal protections for the industry under a newly signed bill. That's right. Governor Mike Braun, he signed the bill. It's 1042 into law on a Taco Tuesday. After it passed the legislature last Thursday, the legislation requires Indiana state public retirement and saving plans to offer self-brokerage accounts with at least one crypto investment option by July of 2027. And according to the bill's description, this requirement applies to the legislator's defined contribution plan, the Hoosier Start Plan, certain public employee retirement funds, and specific teachers' retirement fund plans. More institutions are adopting the digital assets, with BitBo estimating over 3.7 million. Bitcoin, worth over $250 million, are held by the publicly traded and private companies, exchange-traded funds, and governments. The bill also includes provisions to protect the rights for the crypto users. Under the legislation, public agencies except the Department of Financial Institutions are barred from adopting or enforcing rules that ban crypto payments, self-custody, or mining. The bill also clarifies that a money transmitter license is not required for apps and software protocols that allow non-custodial transfers. Local governments, such as countries, municipalities, or townships, also can't single out crypto mining businesses or home miners, with special restrictions not applied to similar businesses or activities in the same mining zone. So at the federal level, President Trump's August executive order democratizing access to alternative assets such as 401k investors directed the SEC to make alternative assets like crypto more accessible in participant-directed retirement plans. Some analysts, such as Tom Dunleavy, head of the venture at Very Capital, and the former senior analyst of Masari, predicted even 1% allocation to crypto 401ks can bring in $120 billion worth of inflows. Now let your imagination run rampant. What if they upped it from 1% into the crypto 401ks to 5%? That's 5x. We're talking over 500 billion, half a trillion. 10x, over a trillion. I say send it. Next up, US spot Bitcoin ETFs add 225 million as BlackRock's IBIT all sets to redemption. And you can see inflows are like a reflection of the price action. We're having a hell of a pump on the day. It's all due to these inflows, Joe. US spot Bitcoin ETF saw a mixed trading flow on Tuesday, with BlackRock's iShares Bitcoin Trust offsetting the redemptions. Bitcoin ETFs logging in $250 million in net inflows. The gains were driven largely by IBIT's 322 million of inflows, which offset the 89 million of outflows by Fidelity and Grayscale. The inflows bring the week's total to 683 million. That's what's up. Following 787 million in inflows last week, the first positive week after 5 consecutive weeks of outflows totaling nearly 4 billion. The inflows came as crypto market sentiment remained cautious, with extreme fear persistent despite the Bitcoin price rebounding up now 8% on the day. And also Ether, we saw some outflows, XRP, ETFs, also very minuscule inflows, but overall the lion's shares right now coming from the preload biddy. Matt Hougan pointed out, some hear criticism, I hear opportunity. There are reasons Bitcoin's 4% of the size of gold. If these critiques did not exist, Bitcoin already be 750,000 a coin. That's what I'm saying. I invest in Bitcoin in part because I'm confident these things will change over time. And you can see Ray Dalio just has a shit face on, and he's warning, saying there's no privacy. Central banks won't buy it. Who gives a fuck? I don't care if the central banks join Team Bitcoin or not. Quantum risk, JV. I rather have the fiat monopoly Illuminati dollars, says Ray Dalio. Meanwhile, Bitcoin advocates, Matt Hougan says there's reasons. Ray said it, pointed it out. Bitcoin would be already 750,000 per coin right now if we didn't have these fudsters. But the good silver lining, precisely where we're headed. And remember, there's no telling. But a constipated Miss Yellen, bananas. All right, Bitcoin still due next leg down. The 73 price precedes the death cross. In fact, we're pumping it up in real time at a life. But a lot of analysts are saying expect a correction down. Okay. Keith Allen, material indicators warned the Bitcoin price weakness was still present beyond the lower time frames. Bitcoin did tap 74,000 here today, having a hell of a pump. He says this is an important candle to watch on the Bitty chart. On the surface, we're seeing a short squeeze. And from a technical perspective, this D candle is attempting to validate the RS flips at the 21-day simple moving average, the 2021 top of 69,000, and the timescape level at 71,300. They also say if the bulls can push the price from here, I expect some friction around the psychological resistance of 75, right around where we're at. Also, a support test sooner than later would be healthy, and I am not sure that the market is going to make it that easy on us. However, if this develops, in my opinion, the longer it takes to grind up, the more durable the rally will likely be. And I also remind you we have a CME futures gap just above 80 Gs, about an 81,000 level, so we may go on up, move on up, like the Jeffersons. Now checking out coinmarketcap.com, you can see Bitty market cap booming today. We ain't seen action like this probably all year. We're up almost 7% on the day, just shy of 2.5 trillion total crypto market cap. Bitty market cap also doing its thing today, almost 1.5 trillion. I love to see that. Checking out top 100 crypto gainers past 24 hours. We got the Doge, we have the SPX and Zcash leading the pack, doing their thing. Crypto greed and fear index today, it's at 10 extreme fear. Yesterday 14, last week an 11, and last month a 14. And checking out the time chain calendar. Right now we're on block height 939,312, and we could exchange one fiat monopoly dollar for 1,369 sats. So you know precisely what to do. You pick up the sats, pick up some gats, and pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. You feel me? And if you're watching on the YouTube right now, I strongly encourage you to visit the Rumble. The direct link is bitcoinnewsalerts.net for the full uncensored episode and to participate in the live Q&A